Welcome to Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 on KATX and KWBY as Angela Robinson joins Terry Slavens to share important financial information to help you live life on purpose. Insurance, investments, estate and tax planning, and much more. All covered now on Life Planning 101.
And welcome into Life Planning 101 right here on KATX KWBY. A couple of different things this morning. First of all, it's not Monday, it's Tuesday. We had a national holiday yesterday, Labor Day. I hope everyone stayed safe. And we also have rain this morning, which is unusual. And we have Jim Kennedy instead of Angela.
Kind of like the rain, it just shows up occasionally.
We're always glad to have Jim in and talk about things. But September, if you can remember a year ago, Life Insurance Awareness Month is the month of September. And Jim's here to tell us a little bit about life insurance and some of the needs and things that it can accomplish.
Yeah, it's it's something that I think years ago you used to see a life insurance salesman on every corner and they was calling you, trying to come to your house or business or whatever. Don't see that as much today, and most of the life insurance is done maybe through the insurance agent where you buy your auto insurance and maybe your banker recommends that you get some, but it is something extremely important. And I learned this years ago. I started in the insurance business in 1978, and that's been a while back. I found out very quickly that people only bought insurance for really one reason, and that's because they cared for their family. They loved them and wanted to take care of them. So once you found that out with someone and they wanted to sit down and talk, but life insurance can be used for a lot of different things. We look at people's estate planning, for example, or they're going to owe taxes down the road. Life insurance is probably one of the most efficient ways to pay for those taxes because you'll pay less money into it. And the great thing about life insurance is the death benefit is tax free. There's no taxes on that. So it's a great planning tool if you have a big tax situation when mom and dad have passed away, grandma, grandpa, something of that nature. The sale of a business, sometimes the business is owned that it's going to be taxed when it transfers to the kids. So it's not even estate tax, but it gives be income tax.
Sure.
So it allows you to make some changes in the way the ownership of the business is. But taxes is a big use for that. And obviously business planning is something insurance is used for because, you have a partnership and all of a sudden one of the partners pass away. And now you have the spouse as your partner. And the spouse really doesn't care anything about running that business. They don't want the business. They
may not even know anything about it.
They don't know anything about the business. They want out of the business, and you need to have the funds to buy them out. Well, if all your money's tied up in your business, where's the money going to come from? And life insurance, again, is a great way to plan for that. And actually, there's a story we have right now that there's gentlemen that they took their whole business and put it inside their 401k. And so all their assets are tied up in the 401k. Well, the partner passed away, and the spouse, she wants her money out of her 401k. For them to get the money out of that 401k, they have to sell the real estate, or they have to be able to borrow against that. And had they had life insurance, he would have gotten a death benefit for the value of his part of the business, could have paid her off, and she could go on down the road. Now, not only did it ruin one life, it's going to ruin two lives, because he's going to have to sell out to be able to get the money to pay her off.
Of course, also, if you have a very critical or crucial employee,
that's very true. A lot of times you'll have a key employee like me. I've got 2 or 3 of those key employees and
key managers.
Yeah, it's key managers of your business. But a lot of business owners they're not there in the business. They hire people to run their business for them, and if that person were to get killed in an automobile accident, die of a heart attack, then all of a sudden they're trying to find someone else, scramble to get someone else to run that business, or they're back into it. And they themselves may not know that much about running the business. So that's a big a plus, is to have insurance on that key employee. You really need to have that. One other thing that we're seeing is a lot of times people are looking for places to put money. And life insurance has always been that vehicle that you could put money into. And you can, what we call, maximize a policy, where you put as much as you possibly can. You don't really look for the benefit of the death benefit of the life insurance, but you want the accumulation of money to be built up in there. And the great thing about life insurance is that money's asset protected. So if you get sued, they can't get to it. When you go to pull it out down the road, like at retirement age, you can pull it out tax-free. So you have to ask yourself this question: do you think taxes are going to go up or go down or stay the same? And I think we all pretty much predict that tax rate could go up.
Sure.
More likely that would happen. So what would be any better than having tax-free income when you get ready to retire, not have to pay taxes on it? So
absolutely.
That'd be a great plus.
Well, when we come back, we'll have more Life Insurance Awareness Month right here on KTX KWBY. Segment 2, Life Planning 101 with Jim Kennedy. It's Life Insurance Awareness Month. Jim?
Yeah. We was talking about using life insurance as retirement income's one source. It also can be used as an emergency fund. A lot of people want to put money back and they don't want to touch it. But if you let your cash value build up in that life insurance policy, it's a source of being able to get to the money. And you can borrow the money, or you can take the money out. You can withdraw the money. Of course, if you borrow it, you can put it back in. And usually it's the best case, because once you take it out,
chances are.
Yeah, the chance for most people are never going to put the money back into the
The other
policy.
thing that I like about that is, compared to a savings account, first of all, your return's probably going to be better. But a savings account at the same bank that you have your checking account is too easily accessible.
That's true.
I mean, with a life insurance, you have to go in and you make a conscientious decision to withdraw that money, where it's not as simple and easy as a savings account. Oh, I just type a couple of keys in and it's transferred to my checking account, and boom, it's gone.
That's right.
But,
right. So you're exactly right, Terry. It really is a true emergency fund. When it's an emergency is when you want to take it out. You don't want to just use it as a passbook savings account.
Sure.
So, but that liquidity feature is something that most people are not aware of. They think they put their money in, they can't get it back out. And true, you do have, it is long term. It's not short term. So it's not something you want to put it in today and want to take it out tomorrow. We're talking, down the roads. And if you're not going to buy a policy and keep it at least 10 years, you probably don't want to buy that type of policy. And so you can buy term insurance, which a lot of people own, because it's very inexpensive. And some changes that we've seen on term insurance is it's gotten cheaper, but you also don't have the privileges in the new term policies that you had in some of the older policies. Like if you bought a 10-year or 20-year term and you're in your last year or two of that policy, and you find out you've got cancer and you need to keep that policy. Well, a lot of these policies you can't convert. So you have to go through re-underwriting, which means you have to be healthy to get new insurance. Well, then now you're going to run out of insurance, paid on it all those years, and you can't keep it.
Right.
And that's very dangerous. So a lot of times we would recommend, you want to get with an expert. And, and I always say it's never the answer, it's the questions. When you're talking to someone, and probably maybe even talk to a couple of different people about buying insurance, because even the companies that we know as the household names are not the same as they were in the past. So things are just different. Things are changing, and we know that across the board, just about on anything that you buy nowadays.
Let me ask you about this, and this is relatively new to insurance policies. It's been around for quite a while now, but Have you seen a terminal illness benefit paid out? A lot of the policies come now where you can, if a doctor says you have X amount of time to live, the benefit, half of the benefit can be, usually is what it is, can be withdrawn.
Yeah, it's called a chronic illness rider. So you can put that on there, and you can use it even if like a long-term care rider. So chronic illness, you can get to the death benefits, so you're not having to wait till you die, and that's a big plus, because it doesn't replace disability insurance, but it's probably as close to it as anything, and it allows you to get to that money and the family to get to it when they really need it, and when you're both still living and bills are expensive and maybe you're having to travel a lot, you're not being able to work, so you need that benefit. So life insurance has changed. It's not the same policy that we saw in
25 years ago.
That's right. It's very different.
Universal life is a thing of the past, for the most part.
Well, I don't know if you call it a thing of the past. It's still there. They have whole life, which is our old traditional products. And universal life came about because of interest rates when they went so high, and then they wanted to compete with the banks because people were pulling their money out of whole life products as fast as they could to put it in a 10 to 12% or 18% interest rate. Well, we all know where interest rates are today.
Sure.
And so that has changed. Another common policy that you see out there today is a variable life. That's where you can invest in the stock market. And then they have an index policy that's kind of a combination of the two. It's tied to an index. There's not any downside in the policy, maybe not quite as much upside, but you can get closer to market returns in that policy. Again, it's like anything. If you're going to have surgery, you probably want to talk to the doctor. And you maybe talk to two doctors, ask a lot of questions, because for the average consumer to go decide what's best for them, it's nearly impossible.
Sure.
And having a professional to help you decide what's good for you. I'd also recommend that you work with someone that offers all of these products. If you work with some agents, some organizations out there, they only offer some of these products. They don't offer all, so then you got could have a biased answer, and that would not be good. So you'd want to make sure that you're getting a real well-rounded explanation to what you need, and don't feel bad about asking questions, because it is something that once you buy it, you get it issued, you throw it in the drawer a lot of times, filing cabinet, and you don't look at it again for several years. And one thing we'll tell you is that life insurance today needs to be reviewed on an annual basis, just like all your other investments. And to set it over to one side and say, "Oh, I've got life insurance," is not exactly prudent. You may not be prudent to do that. Another big thing is a lot of people buy insurance through their business or their company. They have group insurance, and group insurance can change in a business, and so you need to keep up with it. And it's a very inexpensive way to buy insurance. But again, what if you got laid off? What if you quit? Can you keep the insurance? Can you convert it? And then you find you depend on that group insurance, and all of a sudden you've got a lifetime illness, and now you can't get insurance. And so you want to be real careful about your group insurance. Yes, it's great. You should have at least 7 years worth of income for insurance. That's what the National Life Insurance Association says. But I think it's different for everyone, and you really need to review that and see what's best in your situation, because your debt may be different, your income may be different, your opportunities in the future could be different than your neighbors or some friend that you're talking to. So it's very important to review all those things and make sure it's a good fit for you.
All right, we'll take another break, come back and wrap things up right here on Life Planning 101. final segment already, and Jim has some life insurance facts. Jim?
Yeah, I do want to remind everyone that this may be you, it may be your mom, dad, grandma, grandpa. If they own life insurance, they've had it for more than a few years, I'd say 10 years or more, they need to review that insurance. Don't take it for granted that it's okay. And interest rates dropping the way they are, insurance companies are raising costs internally, and that policy could be in jeopardy of canceling out because it doesn't have enough money to pay for itself. So be sure you get an expert professional that knows about the different types of policies, get some help on reviewing that. And it's very, very important. We've had several cases where people's insurance policy was going to run out in their later years of life, and they had no idea that it was going to cancel. So it's very important to do that. I want to give you some reasons why Americans give up owning life insurance, or what the top 3 reasons they give for owning it is they want to buy it for a burial policy. And that's good. And we all need that. We all got to take care of that. A lot of people will just go buy a plan at the at the funeral home, but a lot of people own life insurance just to cover that expense. The problem with that is the fact we don't know what the expense is going to be when we die. Do we have enough? So, there's some different ideas, different thoughts about that, and going ahead and paying for that burial policy or buy insurance that covers that. And so depends on how elaborate your funeral is. It could be very inexpensive, and it could be very expensive. We've seen people spend over $50,000 on a funeral. So, everyone's a little different. Another reason is to help replace lost wages, and income of wages that earns money needs to replace that income. Without that income, where's the money going to come from? And I know for years I've always said I don't want my wife, or you don't want your husband having to remarry to replace income.
Right.
And unfortunately, we know that happens,
Sure.
Especially with children, and then you got maybe a miserable family, pray that maybe that doesn't happen. But life insurance is bought by people who love their kids and love their wives, and they want to take care of them financially. So replace that income is so important. The third reason that people buy life insurance, and this is from the people, not from the agents or the insurance industry, is to transfer wealth or leave an inheritance, equalize inheritance. A lot of times you want to leave things equally. Well, it's almost impossible if you own business or you have different types of assets that are not going to be sold. Some people want the assets, some do not, but it's something that takes care of those final decisions that need to be made at death. So it's very important. And again, it's just a good supplement for retirement income. We see a lot of people using that more and more every day. So what prevents people from owning life insurance? What prevents that? Well, there's two primary reasons for not buying life insurance. It's too expensive, and they have other financial priorities. Wow. Now, that's the biggest reasons that you, especially the financial priorities, you need to buy it, because if you have too much in financial priorities and something happens to you, who's going to pay for it? Yeah. Who's going to pay for that? Who's going to pay the living expenses? How are you going to send your kids to school? How are you going to take care of that debt? And first and foremost, you want to leave your debt free and clear. So always own enough insurance to pay that off. Make sure you don't have that. And again, you need about 7 years worth of income as a minimum. That's a minimum. That's not a maximum. So, you can have enough insurance to pay someone for the rest of their life. Is that necessary? Possibly is.
Sure.
Again, you have to look at the individual. More than 4 in 10 consumers say they haven't purchased life insurance because they don't know how much they need and how much they should buy. So there's obviously some apps that you can go on your phone now and figure that out. again, it's probably better to talk to a professional because they're going to ask you questions you never thought about, and it'd be good to have that information. More than a quarter of the Americans believe they would not qualify for insurance. Amazingly, people don't buy it because they don't want to be turned down.
Right.
Well, the other side of that coin is more people are really going to be able to buy than what they think because they're insuring people today that they would not have insured 10, 20 years ago.
If you can hear thunder and chew Jello.
That's right. That's right. You can buy insurance. So, but not everyone. Sometimes people think they're healthier than what they are. So more than 1/3, 35% of married couples with dependent children want to speak to a financial professional. So that's kind of interesting. So you're not alone. It's a lot of people think, well, I don't want to do that because so-and-so is not doing it, but don't listen to others, do your homework, go talk to someone about what you need, what's important to you, what would happen financially if something happened to either the husband or the wife. Used to be just the husband got the insurance.
Sure.
Now it's just as important. And I've always said it's probably more important because that wife, if she's at home taking care of those kids, who are you going to get to take care of them? So both of you need it. We just want to make you aware this month. It is something that is part of your foundational planning. And we believe that most people need insurance in most cases.
All right, Jim, thank you so much. Great job as usual. Angela will be back with us next week. Enjoy the rain.
Thank you for joining us for Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 o'clock on KATX and KWBY for more Life Planning 101.
Advisory services offered through Smart Money Group, LLC, a registered investment advisor. Securities offered through Calton & Associates, Incorporated, member FINRA SIPC. Kennedy Financial Services Incorporated is an independent of Calton & Associates Incorporated and Smart Money Group, LLC.